Hi there, Michael Beresford and Costa Maltaris here from OpenCorp.
Hey guys.
There's obviously a lot of positivity in the property market right now. Isn't it funny how things change in only 12 months with the property market? 12 months ago, we were recording videos, sending them out on a weekly basis, guiding you through what we thought was going to happen during COVID. We said that there would be a rapid upswing that follows the downturn, and we're well and truly in the thick of that right now. So this is not a long update, it's very much an executive summary. We're going to be sharing with you recent data across all the 4 major capital cities, drilling into what's driving that based on the 6 fundamentals that really dictate property price movements. So we recognise that not all of you are going to have exposure to all 4 of the major capital cities with your property portfolio, but chances are you probably live in one, you've got investments in the others, or at least some of those. So hence why we thought that would be interesting. Costa, why don't you kick off with maybe some monthly and quarterly data that the 4 major capitals have seen?
Yeah, thanks Michael. As you've highlighted, it was all doom and gloom last year. I'll take you through some of the monthly and quarterly data from RP Data, which demonstrates that our markets are growing exponentially. So if we look at the Sydney housing market, up 4.3% for the month of March, up 8.2% for the quarter. The Melbourne market up 2.6% for the month of March and up 5.6% for the quarter. The Brisbane housing market also up 2.6% for the month and up 5.3% for the quarter. And finally, the 4th largest capital city in the country in Perth, up 1.8% for the month and 5.1% for the quarter.
So some really strong growth consistently across all of the capital cities. Maybe I'll start with Sydney and then I'll throw to you. You can talk to Melbourne. We'll go from there and alternate. What's really important to understand from a Sydney perspective is, yes, this growth is rapid. We're getting the question on almost a daily basis, definitely a weekly basis, around does this mean that we're moving back into Sydney in terms of where the market cycles are at? And it's a fundamental point to understand. The answer is no, and the reason for that is those of you in Sydney may well remember that between 2013 and 2017, the Sydney median house price grew by 94%. So that was the trigger for these lending restrictions that we're all very familiar with now to come into effect in March 2017. And just last month did the Sydney median reach a new record high. So the median house price in March actually kicked 13,000 above the 2017 peak. So all of this rapid growth in Sydney, this 8.2% in the last quarter, and the growth on the previous 12 months in Sydney is really just playing catch up and restoring the growth on the back of the median house price correction that we saw from 2017 through to 2020. So let's keep Sydney in perspective. It's an amazing result for everyone that lives there or got property there. In terms of equity creation, absolutely ride that wave, use that equity if you can, but let's just keep some context on that. And we don't have a crystal ball, but at some point in the near future, Sydney will be reaching an affordability cap. Let's shift across to Melbourne, Costa. So Melbourne's obviously, we were a bit prolonged with the extended stage 4 lockdown that we had that the other states didn't. What's driving the movements in Melbourne?
Yeah, thanks Michael. So the Melbourne median house value for the first time exceeded $1 million. Between March and September, the median house value dropped 5.5%, but as I've highlighted, it's up 5.6% for the quarter and well and truly recovered from the stage 4 lockdowns we had. That drop between March and September wasn't a result of weak or poor underlying fundamentals. Consumer confidence took a bit of a hit because of the lockdowns, but Melbourne's well and truly recovered. Record population growth forecast over the next 20 years. The market's heavily undersupplied. Consumer confidence is back, and that's been demonstrated by the really strong auction clearance rates week on week. There's over $100 billion worth of infrastructure spend creating a lot of jobs. The Westgate Tunnel, the North East Link, railway crossing removals, major projects happening in the Melbourne market.
Perfect. So if we then look to Brisbane, probably a really good linkage. You talked about the population growth forecasts for Melbourne.
Sure.
The ABS are forecasting that Melbourne's population will still overtake Sydney's in the next 10 to 12 years. So amazing long-term potential in Melbourne. While we're talking about population growth, I just want to touch on overseas migration. We wrote about this in Investing in the New Normal last year. There's a common belief out there that because our borders are shut, we don't have any overseas migration or population growth, which has been around 200,000 people, give or take, each year for the last 10 years. That's a big misnomer that's being reported by the media. The reality is that between March and December last year, and this number has only continued to grow since then, we had 379,000 expat Australians return home from overseas. And if they're coming from the US and the UK and the Middle East, they're probably getting a pretty good result on their exchange rate, and they're probably bringing some decent income with them based on what they've earned before they've come back. So just wanted to clarify that. Our population is definitely growing. A large percentage of that, about 70% give or take, is moving somewhere between the Sunshine Coast and the Gold Coast. So that's a good lead into Brisbane around net overseas migration. Obviously net interstate migration, which is the other form of population growth, is tremendously strong. If we look between 2017 and 2020, Melbourne and Brisbane had around 95% of the net interstate migration in that time frame. So the vast majority there, that's kicked right up to over 98% into southeast Queensland in the last 9 months. So obvious drivers there, coupled with home builder stimulus, the obvious affordability in Brisbane on the back of the job creation. You know, we're seeing people in Melbourne and Sydney selling properties around $1.5 million, spending $1 million, give or take, on a nicer house in Brisbane, pocketing several $100,000 in cash, and in some cases even getting pay rises to move on the back of the job growth. So look, all of the population in Melbourne and Sydney is not about to up and out and move to Brisbane tomorrow, but that net interstate migration is a key indicator we look at around market timing. We've been talking about Brisbane positively for some time. We're starting to see that growth that we've been seeing coming. The final thing around Brisbane is we've seen dramatic reductions based on that overseas and interstate migration in the vacancy rate. We shared some of this data through to October last year at our client night, and what we've continued to see since then is a sharp reduction in the vacancy rate across the board. In a lot of cases, we're getting between $30 and $60 a week more in rent than what we did the PIA cash flow projections on for our clients that were buying in the middle of last year. One last thing to touch on around Brisbane is the vacancy rate. So for those of you that tuned into our client night last year, we shared some data around what was happening in different pockets of the different capital cities. But across the board in Brisbane, we've seen a sharp reduction in the vacancy rate, and that's continued into 2021. For clients that were listening to the advice, buying middle of last year to be positioned for the upturn, we're seeing between $30 and $60 a week more in rent that they're getting for their properties now that are leasing out, compared to what we put in the PIA cash flow budgeting tools that we give you around our recommendations. So vacancy rates having a really big impact on rental growth. That's obviously going to feed into capital growth, because there's going to become a tipping point where it becomes cheaper for people to own than to rent. The big caveat is they've got to have the deposit, and that's the barrier for a lot of people being able to get into the market. So that's the one on Brisbane, and you bought in Perth last year, Costa. Why don't you talk about what's happening in Perth?
Yeah, thanks, Michael. So similar to Brisbane, Perth is very affordable relative to our two largest cities in Sydney and Melbourne. So Perth's median house value is $560,000. Like Brisbane, the vacancy rate is extremely tight. It's in fact 0.9%. So we classify that as a bit of a rental crisis. Lowest vacancy rate in the last 25 years. So like the Brisbane market, we've seen a significant increase in rents in the Perth market. In fact, the strongest increase in annual rents across all major capital cities. In addition, the Perth market's heavily undersupplied since it peaked in 2014. The population growth forecasts are looking strong. The Perth state government introduced a 20k WA home builders grant on top of the federal government's 25k grant. So there was some huge sales activity that we saw between July and December of 2020. Finally, there's some really big infrastructure projects happening within the Perth market right now. The MetroNet project, $4 billion between now and 2024, 17 new stations. The majority of that infrastructure spend is on road and rail. they're preparing for the population growth forecast for the Perth market.
Yeah, it's really interesting you talk about the infrastructure projects. Perth's on a massive trajectory to really set themselves up for the next 20 years of population growth and how they handle that. Those projects you talked about are not new projects per se, they're the extension of existing freeways, they're the extension and additional stations on top of the existing rail network. So as population growth and urban sprawl continues to occur, these are infrastructure projects that are coming ahead of the curve to be able to appeal to the people moving into those kind of areas and sustain that population growth long term.
Just finally on Perth, I'm not sure if anyone saw the revised ANZ forecast for the Perth market, but for 2021, ANZ have forecast that Perth is up 19%. It's followed by 9% in 2022. So if we can get our timing right in Perth, there's some huge growth to be seen in that market.
Yeah, I interviewed Tim Lawless last month and he was talking about the potential of Perth. I did talk to him about the fact that Perth kind of comes with a caveat. When it does grow, it grows very quickly. Yeah. It does have extended periods on the sidelines. I've got a property in Perth, I've seen that in the last 10 years. But the vacancy rate is probably the critical thing that you mentioned there. I just signed a new lease on my property in Perth and I had to spend about $1,500 refreshing it. Yep. I got another $120 a week in rent. Yeah, wow. So massive cash flow benefit there. It definitely makes sense to have some exposure to Perth in your portfolio if you don't already, but look, if you've got 4 properties, you wouldn't be getting 3 in Perth. We want exposure to the larger capital cities as well. So there you have it. That's the market update from OpenCorp. I hope you're well. If you have seen growth in the areas where you live, as you know, we're always here. We're always happy to take a phone call. Shout out. We can review borrowing capacity, understand your equity position, and start planning for when you might be able to move forward, or at least refinance, based on the record low interest rates that we've got at the moment and the RBA's commitment to those record low rates for the next 3 years. The one thing that we would say is we did get caught out with lending restrictions. Some of our clients delayed getting into the market when they had the opportunity. These restrictions back in 2017 came in quickly, and some of those clients have only just been able to get back into the market more recently with these interest rate reductions. So we have seen things in New Zealand where LVRs have been capped and so forth. Don't hesitate if you do want to add to your portfolio and you've got the capacity, or at least as a first step, review that capacity. We always say it, that's the first step. Reach out and hopefully that's been helpful for you.
Thanks guys, hope you enjoyed the insights. Look forward to speaking with you soon.